In the third quarter of 2024, Nigeria recorded its lowest capital importation inflows of the year, amounting to $1.25 billion, significant drop of 51.9% from the $2.6 billion reported in the second quarter of 2024. This marks the third consecutive quarterly decline, driven by sharp decreases in portfolio and other investments. Despite the overall slump, foreign direct investment surged by 248%. Well, joining me for more on this, I have Victor Aluyi, Senior Vice President and Head of Investment at Sankore Investments. Thank you so much, Victor, for joining me today.
Thanks for having me.
But I believe you've seen that particular report. So talk to us, what are the major highlights for you?
I think like you highlighted, we're seeing a drop-off really, right? If you compare the capital importation story this year with what you had last year, you really had seen very significant improvement. For instance, the Q3 figure stands at $1.25 billion. If you compare that to the Q3 figure for last year, which was somewhere just around $654 million, that's essentially double what you had last year. However, if you look at what you've had through this year, you've essentially seen a steady decline, right? So if you look at between Q1 and Q2, you had a 23% drop. Between Q2 and Q3, the drop was even larger at 52%. Now, if you compare at the beginning of the year and Q3, you're seeing a 63% drop. So it is instructive that the sort of momentum that we seem to have come into towards the end of last year and into this year is seeming to kind of lose strength, so to speak. So I think that's probably one of the most instructive things that, we are seeing come through for that report. Recall that we had quite some reforms last year, also coming into this year. It really is believed that those reforms have essentially helped to significantly show up, foreign flows of capital imported into Nigeria. However, the drop-off that we are seeing now is a bit concerning because it's become sort of consistent through the year, and it's also looking somewhat significant.
Well, what do you attribute all of this to? Because when you look at that report, just like you pointed out, we're seeing decline in portfolio investment. We're also seeing a decline in other investments. Though when we come to foreign direct investment, we saw a surge, which of course is good. But what do you attribute to all of this?
Well, like you said, so we're seeing declines across board, right? So if you look at the foreign portfolio investments, you are seeing a 56% drop since Q1 for FPIs. Now, if you look at, the yields in our fixed income markets, we've seen a significant increase from the beginning of the year. However, through Q3, we saw some kind of drop in the 1-year PMA auction rates. Same thing happened in the home auction rate as well. However, we have seen some sort of recovery or a bit of resurgence, particularly through Q4. So part of that reason obviously would be that, we've seen a bit of a drop-off in rates because these foreign portfolio investments essentially are attracted to the higher rates that we have, we've had pretty much through this year. So it's sort of like a drop-off in those rates, I believe, has created a situation where we've seen a drop-off as well in, that foreign portfolio investment number. The same thing for other investments as well. And the major culprit there really is loans, which, really fell off a cliff, dropped quite significantly. Again, what that just simply tells us is that a lot of the foreign loans that, companies are able to secure, we've seen a significant reduction coming into the third quarter of this year. So I think those two factors, really, if you put it together, have been largely responsible for the sort of drop that we have seen, in capital flows into the country. Now, for the FDI picture, really, yes, we've seen that improvement, but it still accounts for less than 10% of the total, capital inflow picture. And that has been the case for, quite a while, really. And it speaks to a lot of issues that certainly need to be addressed for us to truly attract, proper FDI into this economy.
What do these trends sort of indicate about the country's economic trajectory? And maybe you also want to look at investor sentiment and how significant this is for Nigeria's investment climate.
I think, it's just, again, we've seen that consistency, but however, I'll say it's just, a couple of data points, I think investor sentiment still remains very, very decent. And that is really reflective in the fact that just last week we were able to tap the international capital market and we raised about $2.2 billion. Matter of fact, we wanted to raise $2.2 billion. We've got an order book of $9 billion. So that speaks volumes. That says a lot. So I don't think that, the sentiment has necessarily turned bad or sour, but I think that we've probably just seen some moves within Q3 that has led to a drop-off. And I do think that going into the fourth quarter of the year, we are likely to see a pickup in that number, particularly if you look at the foreign portfolio investment segment of this capital importation report.
Absolutely. We already have the reports for that anyway, so we'll be expecting them to release it officially. Now, let's look at this. The banking sector sort of attracted the largest share of capital importation in the third quarter. How sustainable do you think this is, this reliance on banking, and what steps do you think can be taken to sort of diversify this across other sectors? Or do you think it's not necessary to have that diversification?
Well, so let's be clear. It's not like money is going into the banks necessarily. So what you're seeing again is that funds flow through the banks, right? So if you even look at the banks, the foreign affiliated or even the foreign banks are the ones that have accounted for, a significant portions of these inflows. Banks like Standard Chartered, Rand Bank, Citi, and Stanbic IBTC. So it's not a case where necessarily investment is going into those banks, but it's a case where those investments have been routed through those banks and have gone into, treasury bills or more auction and stuff like that. So it's not a case where necessarily that money is, going, into banks. So it's important to sort of clear that up, really.
Oh, that's quite interesting. So now what policy measures, do you recommend really so that we can attract more foreign capital? And this time, I'm not necessarily all about foreign portfolio investment because at the end of the day, we're talking about debt here. I mean, a good number of those are debt instruments. So talk to us, maybe not everything anyway. So talk to us about attracting foreign direct investment. What are the regulatory, issues you think we need to change, or what exactly should be done so that we can attract more into the country?
I think that what needs to be done is very well documented. There's really no point sort of regurgitating or going over that. It's clear the things that need to be done. We have very significant challenges with security. We have huge challenges with infrastructure. Again, the nature of foreign direct investment is what you describe as, solid investments that essentially comes to stay, right? So the funds, the people that are bringing these funds, need to be comfortable that the right environment is available for them to operate. The right environment is available for them to be able to earn a decent return on their investment over a long period of time. So the issues are clear. They are very well documented. The infrastructure issue, it needs to be dealt with. We as a country, we need to be on a more sustainable fiscal path. The issues around security, they obviously need to be taken care of. Regulatory issues, obviously, those are things that need to be taken care of. So again, like I highlighted earlier, it goes as far back as 10 years where foreign direct investment really has remained lackluster if you look at the whole capital importation picture. So it's not an issue that has just reared its head. It's always been with us. So the policies, the measures that essentially deal with these infrastructure issues, the measures that deal with security will certainly go a long way in ensuring that we sustainably attract foreign direct investment.
All right, I think I just want to tie two things together. It's okay to also talk about, foreign direct investment or capital importation, but what about the companies that are here in Nigeria? Are they being encouraged to grow? That's on the one hand. And then on the second hand, I might just want to ask you why you think Lagos and Abuja continue to dominate, capital inflows, while we have some other states that are probably not doing enough. 2 in 1.
So I'll take the last question. It's really simple and obvious, right? Lagos is the commercial nerve center of the country. Abuja is the administrative headquarters. So if you've got funds coming through, they would obviously go or gravitate towards those areas. A sizable amount of the economic opportunities in this country reside in Lagos. So it's really a no-brainer if people are bringing money from abroad that those monies will go to Lagos. Also, Lagos is where you have, the operations of the capital market, the operations of financial institutions. So it's really not a. It's not a thing of whether these regions, these other states are not attracting funds or not. It's just a thing of the fact that Lagos has been or has always been much more attractive. Lagos is much more significantly attractive, and it will continue to be like that for a while longer. So again, there are really no surprises there really.
Absolutely. Thank you so much, Victor Aluyi, Senior Vice President and Head Investments, Sankore Investments, for your time on the show today.
Thanks for having me.